Should you borrow from your 401k to remodel? So I was working with these clients today, and they've been in their house, I think they said 20, 21 years or something like that. Local to me, North Georgia, good people, crushing. And, probably cost $30,000, $20,000, something like that. And they're both my age, about 55. I think he's 56. So they're not 59 and a half yet, so they don't have access to their money tax and penalty free at this stage, or at least in this case, penalty free. Now, they do have a brokerage account, and they do have a Roth. Obviously, you can't really touch the Roth other than the amount they initially put in, which isn't very much. So the brokerage account, take a loan, or borrow from the 401k. I said borrow from your 401k. Absolutely. So let's just use $50,000. All right, I'm gonna give them $50,000. They're gonna borrow from their 401k because they got to get a couple other things done too. So the house, I think they said bathroom or kitchen remodel, I forgot, and something else done too, I forgot. Maybe do HVAC. So we'll just use a 6% interest rate. We'll say the bank is charging them 6%. So $50,000 comes out of their 401k completely tax-free. They got to pay it back in 5 years. Essentially, they get paid twice a month. That's going to be 120 payments back is what it would be, essentially. So they got to pay 120 times back to their 401k. And she's in a very stable job. So she's not getting laid off anytime soon. That we can foresee. I mean, who knows? Anything could happen. All right, so $50,000 is our present value. 0 is our future value. 120 is the amount of payments at 6%. What is her payment on every 2 weeks? Hey, that's gonna be $555 a month. All right, so she puts $555 a month. She's paying the bank back, and after end of 5 years, she has paid back $66,600. She borrowed $50,000 from her own money. She paid back $66,600. Who actually is getting that $16,600 of interest? You want to take a guess? She is. It's not going to the bank. It's going back to her. This is literally the epitome of the bank on yourself concept. It's literally going back to her. She gets the $50,000 out tax-free. The $66,600 she's putting back in. And people say, but she doesn't get a tax deduction on the money going back in. Yeah, she doesn't. But she gets the $50,000 out tax-free. It's pretty sweet. So now her account guaranteed is worth $66,600, right? Whereas if she would have borrowed from the if she would have borrowed from a bank, she'd pay $16,600 as interest, all right? She would have no money in terms of she had to pay it all back, all right? So she has nothing to show for it other than the remodel. Nothing wrong with that, but you got to pay $555 every 2 weeks. That $16,600 of interest is going back to a bank, not to you. All right, now, she doesn't have to pay tax on the loan, I grant you. Still, though, if I can borrow from a bank, pay them $16,600 or pay myself $16,600, what would you do? Doesn't make any sense not to do that. Absolutely. You don't want to borrow from the brokerage account. You don't want to take money from the brokerage account, because what that does now is a brokerage account will be reduced by that $50,000 she takes out, which means not only is that money not potentially able to grow, but on top of that, that money is not there when they need to potentially go on Obamacare, all right? So let's just say they quit at 60 years old. That $50,000 from the brokerage account is reduced. Not only is that $50,000 gone, but the growth on that $50,000 is gone too. And so essentially they got at least $50,000 less that they can use to give them on Obamacare for premium credits. Whereas they took it from the 401k, that brokerage account is still air and can still hopefully grow. Now, people will say, yeah, but the money you took out from the 401k isn't growing at whatever the market does too. Well, not necessarily true. That $50,000 is not, but every payment you're putting in, every $555 a paycheck is going in, that is now back in the market, so that will grow at whatever the market does, all right? So essentially it's saying, I'll take this $50,000 out, I'm plugging in $555 a month. And if that money grows, it's going to be worth more than $66,600. So I'm just saying a 6% interest is what you're paying back. You're borrowing 50, you're putting back 66,600. That does not account for any growth you get in those dollar cost averaging, the $555 a month. So now we got the $50,000. We got our bedroom, bathroom, whatever, kitchen remodel. On top of that, our brokerage is left alone. So if the market goes up, our brokerage account's taking advantage of that. Yeah, the $50,000 won't be in the market to take advantage of that. It'll be, again, dollar cost averaging on a regular basis. A portion of that will be in there. That's great. If the market goes down, though, guess what? That $50,000 is out. So now I'm putting $555 back a month in, buying low cost because the market went down. You see? So there's always a reason that this works, as opposed to paying a bank, as opposed to taking money in my brokerage account. And you can't touch his Roth because he's under 59.5. And he only has a small amount that he put in for his contribution. So we don't want to do that. So that is how you use a 401k to remodel your house. All right. So I will tell you, if she quits or leaves work before 5 years, she'll either have to pay the whole thing off, whatever's left, or she'll pay taxes on the remainder and a 10% penalty because she's under the age of 59.5, right? That's what happened to me. I had a 401k loan. I got LASIK surgery, had a 401k loan out there, and I think I still owed like $8,000 or something like that. It was LASIK surgery and something else, actually. I forgot what we did. So I had to pay taxes on that $8,000 and a 10% penalty. It cost me $800 plus income tax. You know, that sucked. I could have paid the money back, but I want to have the liquidity. That way, I had enough cash to pay the bills. In this case, for them, it'd be cash to be able to afford Obamacare premiums for lower because they're living like they're poor on paper, as I always talk about. Anyway, don't overlook 401k loans. I'm telling you right now, use a 401k loan to borrow, to pay yourself back, and to do your mortgage, not your mortgage, your remodeling and things like that nature. Pay yourself first. All right, God bless. Smash.